Researchers at Paradigm, Dave White, Dan Robinson, and Hayden Adams, have introduced a new type of automated market maker, or AMM, that helps traders efficiently execute large orders. It is called Time-Weighted Average Market Maker, or TWAMM. Hey everyone! Welcome to Ether World. Today we will discuss about TWAMM. It breaks long-term orders into infinitely small pieces and executes them smoothly over time. Let's say Alice wants to buy 10 million USDC worth of ETH on-chain. An order of this size will be expensive to execute, and Alice will be charged high fees. Alice's best option is to manually break her order up into several pieces and execute them over hours. If she sends a few large suborders, each will still have a significant price impact and will be vulnerable to sandwich attacks. If viewers don't know much about sandwich trading, then they can check out the video on I button or link in the description. On the other hand, if she sends many small suborders, she will have to take on all the work and risk of active trading and will pay high costs in the form of per transaction gas fees. TWAMM resolves this for Alice by trading on her behalf. It breaks her order into infinitely small virtual orders to ensure perfectly smooth execution over time. If we compare a similar scenario with traditional finance, then if an investor wants to buy $10 million of Apple stock, they would not send a $10 million market buy order directly to an exchange. Instead, they need to send 10 orders, for $1 million each. Instead, they would most likely send their large order to a broker, who would put on an algorithmic trade for them in exchange for a fee. The broker would execute the trade over a specified period of time, say, 8 hours, at a price similar to some benchmark. The most basic type of algorithmic trade is the time-weighted average price, or TWAP order. For example, an order to buy $10 million of Apple stock over 8 hours would get filled at a price close to the time-weighted average price of Apple stock over that period. For example, if Apple stock spent 4 hours priced at $100 and 4 hours priced at $120 over the time period, the time-weighted average price would be $100 multiplied by 4 plus $120 multiplied by 4, and the whole is divided by 8 is equal to $110. And the broker would execute the TWAP order for near that price. The time-weighted average market maker provides the on-chain equivalent of the TWAP order. In addition, it has specialized logic for order splitting and a direct connection to an embedded exchange, providing smooth transaction execution for low gas cost. Arbitrage traders keep prices on the TWAMM's embedded exchange in line with market prices, ensuring the execution near the time-weighted average asset price. The TWAMM contains an embedded AMM, a standard constant product market maker for those two assets. Here is the constant product formula. X multiplied Y is equal to K. The constant K denotes a balance of assets that determines the price of tokens in a liquidity pool. The X and Y represent equal quantities of pool assets. If an AMM contains ETH and USDC, the price of ETH rises every time ETH is purchased since there is less ETH in the pool than before the transaction. In contrast, when more USDC is added to the pool, the price of USDC falls. The pool is always in a state of equilibrium. The TWAMM breaks these long-term orders into infinitely small virtual suborders. Processing transactions for each of these virtual suborders individually would cost infinite gas, but a closed-form mathematical formula allows us to calculate their cumulative effect only when needed. The execution of long-term orders will push the embedded AMM's price away from prices in other markets over time. When this happens, arbitrage traders will trade against the embedded AMM's price to bring it back in line, ensuring good execution for long-term orders. For example, if long-term sales have made ETH cheaper on the embedded AMM than on some other crypto exchange, arbitrage traders will buy ETH from the embedded AMM, bringing its price back up, and sell it on that crypto exchange with a higher ETH price for profit. We have come to the end of the video, and if you want to know more, please subscribe to Ether World. And don't forget to visit our website, www.etherworld.co. Comment below any questions or future topics you would like to see in this channel. Thanks for watching.